Well, I'll give you an example, if I may, just from my own personal experience. When I began my journey in real estate investing in 1998, my first property that I purchased was a condo style townhome. And my down payment was a whopping $3,500 at that time. I know that sounds like, how on earth could that happen nowadays? And I began to accumulate property, and I was leveraging. So I was creating leverage. Properties were increasing in value. People recall in the early 2000s, through that period of time, there was a rapid increase in property value, especially out west here in the province of Alberta. And then I began to hit a wall of access to money to continue to buy more property. And it was right around that time frame of 2008, April of '08, when I purchased my principal residence that my wife Rebecca and I moved in together. And you could still get 40-year amortizations on your mortgages at that time. And we thought, having not been exposed to this concept yet, we thought that a low rate of interest and a long amortization period, that was perfect for us. It was in July of that same year when I was introduced to the process, and this book titled Becoming Your Own Banker, this 92-page book, is what changed everything for me. And when I began to implement this, which the implementation is all about putting together a policy or a system of policies. I'm referring to life insurance, dividend paying, participating whole life insurance policies that are designed for maximum cash value accumulation. If you envision for a moment, you've put this contract in place, or a series of contracts like we did, you begin to immediately, from day one, you begin to fill up an aquarium, so to speak, with cash. And this cash can be utilized as leverage. You can borrow against that accumulating value on your terms. So the loans that you receive from the life insurance company are unstructured. You control the repayment schedule. We began to access policy loans, and we were taking the insurance company's money while our aquariums kept filling up with more cash every day. And we began to bite down the principal balance of the mortgage on our principal residence. It took us 7 years to get rid of the commercial bank. And at the end of that 7-year period, so 33 years ahead of our original amortization schedule, we had a loan balance outstanding with the life insurance company, but we control the repayment schedule. We own the asset. It's totally unencumbered because the lien is not against the real estate for the loan. The lien is against the death benefit of the insurance policy. So that put us in a position of total and absolute control. And we began to experience that peaceful, stress-free wave of life financially. And fast forward to today, we have 62 policies in our system, and we are
Wow.
actively involved. So my premiums that go into my system of policies are $530,000 a year. We didn't start there, but we are actively involved in real estate, and we get to take advantage of opportunities that track us down because we have ready access to capital on demand on our terms. And that, from that very place, we can accumulate and create more abundance. But by the very same token, we're not worried about what's happening in the economy. We're not worried about what's happening as it relates to a temperamental stock market. We're not worried about those things because these insurance contracts, these unilaterally binding contracts,